Good morning and welcome to the live stream. My name is Charles. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I appreciate everyone joining me here this morning. If you have any comments or questions based on anything that I'm talking about today, you want to jump into the Discord under Futures-Charles and ask me your questions there. I can see Rich is with us this morning. Good morning to you. And Trader is here. Happy to see you. Looks like Dan P is typing something as well. All right. Well, this morning is going to be a tricky one. It's going to be a little bit harder to do analysis pre-market, so like over the next 30 minutes, and much easier to just wait for the market to open and kind of see what it does. So obviously there is something very unusual happening right now. If you're looking at my screen, my numbers might not line up with yours. Boy, we're at 666. So my numbers might not line up with your numbers right now. And that is because, you know, the continuous contract that I use to trade on my window trader software, that automatically rolls over on the first day of the rollover. So right now, what we're seeing on this market profile chart is the Z contract, the levels for the Z contract. You might still be trading the U contract, which was the contract from last week. If you are still trading the U contract, don't worry, don't sweat it, don't stress. You can continue to trade that contract for the next week. You can trade it until Friday. Friday is the last day you can trade the U contract. By next Monday, by a week from today, you have to have rolled over into the Z. For me personally, I just automatically roll over on day one because that's what my chart is showing me, is the levels for day one. So today, there's going to be a lot of clicking around. Okay, I'm going to be switching on the Bookmap. I'm going to be switching between the Z contract and the U contract because liquidity-wise, it's still split. Okay, there are still a lot of traders that are trading the U that haven't quite rolled over to the Z yet. Most of the liquidity will be in the Z contract by tomorrow. So starting tomorrow, I won't pay attention to the U at all. I'll just be solely focused on the Z. Where is price? How much time? How much volume? I'll be looking at the Z contract in Bookmap to be looking for stops and icebergs, to be looking for, key levels based on where the liquidity nodes are. That'll be on the Z contract starting tomorrow. But today, because market participants are kind of split 50-50 between the two, I'm going to have to switch back and forth. So if I'm seeing something in the Z contract, I'll have to click back over to the U real quick and make sure I'm not seeing something contradictive in the U. As far as entering trades is concerned, I'm focused on the Z, okay? Not the U anymore. So just to clarify that, if your prices are different. Now, what do we expect today? What do we expect the market to do? Well, we broke out of balance last week. So let's just take a second. We'll go back to the daily chart. We have been monitoring this balance area for a couple of months now that the market has been stuck in. We've drawn it as this, ascending triangle that you see here on the chart. We broke out of that ascending triangle last week. That is bullish to see. Okay. That increases the odds that we're going to get momentum. We're going to move in a certain direction. Why? Because balance leads to momentum. When you're balancing inside a range, the market is trying to decide which way to go. And it's like a jack in the box. It's just getting strung up tighter and tighter. It's like a spring that you're just smushing it more and more and more. The more times that you keep trading around inside of here, the tighter that spring is becoming. Well, when it finally gets to release, it's probably going to boing, right? It's probably going to make a bit of a bounce because it was able to break that tension that was built up. So for that reason and that reason alone, I assume the momentum is going to continue higher today. I am bullish for that longer time frame read that the market has broken out of balance. Since the breakout, we've been one time framing higher. We have had momentum. Now, What is the sign to me that we're done with this momentum based on this breakout and that we need a pullback? Well, as soon as we make a new daily low, okay? As soon as the regular trading hours one day gets below the low of the regular trading hours the previous day, that's when I'll know that this momentum is over. Now, it doesn't necessarily mean we'll get a big pullback with price. We may just go sideways, but that's a conversation for a later time. Right now, we are still one time framing higher. Right now, we are still making those higher lows on the daily. And so there's no reason to assume the market's not going to keep going up. This is why we study the auction process, is for moments like this, because we know the balance leads to excess. We know we're getting excess. So what should we assume? It's going to keep going up, right? That's our edge. We can trust the momentum to the upside because we're still getting signs we have momentum to the upside. Until the market generated information, until the chart itself tells us that that momentum is over, we should assume it's going to keep going. Okay? So how will the chart tell us the momentum is over? When we make a new daily low. Why is that extra confusing right now? Because we got two different daily lows. We got the daily low on the U contract and the daily low on the Z. Okay, so just keep an eye on both the contracts. When they start making new daily lows, in the case of the U contract, that would be getting below 65.83. Once they start to do that, then the momentum up is over, and we start to look for either a sideways or a pullback market after we see that. We have not seen that. So right now, we still see the market as bullish and has the highest probability that we are going to continue to the upside. Okay. I'll be watching this overnight range as a chop zone. Again, because of the confusion with the rollover and because of the way the data is being presented to me at this particular moment, it will just be easier for me to say I'm not going to force a trade very first thing in the morning. I'm going to let them grind around a little bit inside this overnight range. Now, if once we open the regular trading hours, we start to get new buying above that overnight high, great. Then I'm in it. We got the momentum. I'm happy to ride this thing to the upside. But I'm not going to jump into a trade until I see us get above that overnight high. Same thing with a downside move. There's no reason in my mind to start shorting the market within the first hour of the day today if we're still above this overnight low, which again on the Z contract is 66.42. Okay. I don't really want to be shorting above there. We get below it, sure, because then we're starting to see a change in momentum. But right now, when the market opens and we are still inside this overnight range, we are still inside this blue box. To me, there's nothing I need to do. I can just let it go. Let it go up 10 points. Let it go down 10 points. Let it go all over the place. And I don't feel a need to force a trade at all. Because as a general thesis, when it comes to trading, the way that I like to approach it is I only take trades when I feel confident that I have an edge. What does that mean? I feel confident. I feel certain that the market is going to go in the direction I think it's going to go. Right now, I think it's going to go up. Right now, I'm bullish, right? But I'm not certain it's going to go up. I'm not confident enough to go long right at this moment. What would get me confident enough is that new buying above the overnight high. Okay? That new buying up there would be the thing that would make me feel confident that we still have momentum and that we're going to keep going. So unfortunately, there's not a lot of prep for me to do here today. Pre-market prep, the contract rollover has created so much confusion and so much uncertainty. Really, all I can do is wait for that opening bell to ring and then see what happens. Let's see how the world reacts to what's going on right now. Then I react to their reaction. That is essentially the way I think about it, is like, right now, I cannot make a strong prediction. I cannot give clear price levels. I cannot say, if the market reverses exactly at this level, because some people aren't looking at the Z contract. Some people are still trading the U and they're looking at the U and they don't give a shit about, 66.50 because they're all the way down here at 66.08 right now. And so they're looking at totally different levels. They're going to enter their trades at totally different levels and at totally different times. And all I can do is just let the market open, watch how everything is reacting to everything, and then look for opportunities to take trades. So I would love it if you guys would ask me questions so that we have something to talk about for the next 20 minutes while we wait for the market to open. Trader says using the Z contract is no problem. The ES volume will roll at the cash open. Sometimes it does. A lot of times it's the most liquidity will be in the new contract on Tuesday. Usually it takes a full 24 hours for a majority of the volume to roll over. We can actually look it up if we're curious and see. So yeah, if you look at the volume here, the total volume that's on the September contract is still significantly more than is on the December. Okay. Now we can see that it's changing. We can see that people are closing out their trades on the U and they're beginning to open them on the Z. We can see that transition is taking place, but it has not happened yet. A majority of the volume is still in the September contract. Okay. So that's fine. I mean, we don't need to worry about that. There's more than enough volume. 600,000 is more than enough volume for you and me, retail day traders to do business on the Z. We don't have to worry about it in that regard. But using the fact that we use liquidity as part of our signals for entering trades, then we need to know where is the most liquidity. And it becomes really important. Because if you're looking at the Z contract alone for liquidity to tell you what the market is doing, you're missing most of the information. And if you're looking at the U contract alone, you'll be missing most of the information tomorrow when this volume has rolled over. And a majority of the volume is in the new contract. Okay. So right now you could trade either one, but you want to watch both of them. By tomorrow, you should be able to just focus on the Z. We got Billy K in the house. Good morning to you. It looks like Matthew was asking where he can leave comments. Dan clarified that, so thank you. If you are looking to leave comments, just head up to the tab that says Futures-Charles. Okay? This one right here, it says Futures-Charles. If you just click on that, you can leave me questions there. So you just click on it, write your question, then come back and hang out here again to hear the answer. Man, I must be honest. I'm usually not for a lack of things to talk about in the morning. I really don't know what to talk about right now. If you guys don't ask me questions, there really isn't much to discuss until the market opens. So why don't I just take this time, because some of you who are watching this for the first time may not be as familiar with what market profile is and how I use Bookmap in my trading. So maybe I'll just take a moment to kind of talk about those two and why I use them and how I use them. I am a believer that there is no right or wrong in terms of technical analysis. So it's not that there is some correct tool that if everyone would just start using this tool, they'd all be profitable traders or whatever. I don't believe in that. I know a lot of you think that that's what you're looking for. You're looking for that tool that's going to make you profitable, that tool that's going to give you your edge. And I don't believe the tools give you an edge. You know what I mean? If you take a great athlete in a particular sport and you give them shit equipment, they're probably still going to outplay athletes with less skill. You know what I mean? If you take a basketball player that's like an NBA basketball player and you give him the shittiest sneakers on earth, and then you put him against, somebody who's on like the high school basketball team, the pro player is still going to win. The sneakers are not what make you an excellent basketball player. That being said, if you're a pro basketball player, you want to have the best sneakers you can have. Same thing with like golf, for example. You could give a pro golf player a pair of old, shitty, crappy old clubs, and they'll probably still win against your average Joe, even if that average Joe is using the most expensive, nicest clubs in the world. That being said, if that pro is playing against other pros, they want the best equipment possible. Okay. So I don't believe that the charting software you use has anything to do with your success when you're still building skill, when you're still getting to a certain level. Once you've gotten to that level, once you've gotten to that pro, sort of expert level, then you want the best tools possible because they will give you the best edge. But in the beginning, you're just learning the skill of trading. Okay. So as far as that is concerned, market profile software, which is what are called TPO charts that lay out the information in 3 dimensions in a bell-shaped curve, are, in my opinion, the best way for me personally to read the market data. The second most important thing is the Bookmap, what you see over here on the right. So what I'm watching the chart on the left for is I'm trying to figure out what is the market doing, right? Like at this moment, what is it doing? And based on what it's doing, what is it most likely to do next, right? So if it's trending higher, it's most likely to keep going up, right? If it's trending lower, it's more likely to keep going down. If it is balanced, if it's a bell-shaped curve, it's more likely to keep going sideways, right? So what is the market doing right now? And what does that mean it's most likely to do next? And then I use the order flow for 2 separate purposes. One, as a confirmation of what I'm seeing in the price action. So if the price action that I'm looking at on market profile is telling me that the market is going to keep going up, well, great. Does Bookmap confirm that? Why is the market going up, right? That's the other reason. I can use Bookmap to make sense of what's happening in the price. So maybe let's say price just keeps going higher. It just keeps going higher and higher. And I'm sitting here and I'm saying to myself, how on earth can it keep going up? Like, why does it keep going and going and going? Why won't it reverse and come back down? I don't understand. And then I look over here and I start to see that over and over again on the Bookmap, we are taking out stops at the high. We just keep doing it. We poke up, we make a new high, we take out some stops. We come back down, we poke up, we make a new high, we take out some stops. We come down, we poke up, we take out some stops. Well, as long as we keep taking out stops every time we poke up, guess what the market is going to do? It is going to keep poking up. It's just going to keep going and going and going. And sometimes it can do it all day long. It can do it for hours. It can just keep going and going higher and higher and higher. And what am I using to know that it's going to keep going higher and higher and higher? I'm using that stops on Bookmap. So that if I see it pokes up and it takes out more stops, what am I saying to myself? I should buy the next dip. It's probably going to keep taking out stops. Now, eventually, the moment will come where it will poke up and there won't be any stops there. It'll just poke up and turn around and come down without taking out any stops. Well, that's when probably the high is in. So I don't want to buy that next dip. As a matter of fact, I might start looking for resistance to go short. Okay? So by combining the information, price action telling me what the market is trying to do, and Bookmap showing me the execution of why it's doing what it's doing, and also confirming what I'm seeing in price action or not, that's what gives me the edge. That's what gives me the confidence to say, I can go long, I can go short. And so that's why these two are my main focus intraday each day. I also take a look at the market internals. That is this set of screens that you see right here. The main one of which is the ticks, the tick chart down here in the bottom right corner. This right here is sort of my third go-to for market analysis. So I'm seeing something happening with price action, and I'm relatively certain that it's going to take place. Let's say, for example, I'm seeing momentum up. I'm seeing a trend up. I'm seeing on Bookmap that we keep taking out stops every time we poke up. So I'm assuming that that trend is going to keep going and that we're going to keep poking up. Now I want to buy support. So I use the TPO chart to figure out where that support might be. And then as we push into that support, I click on over to the ticks to see, are we getting it? If we're getting momentum on the ticks, if the ticks are going up at that moment, as the market is bouncing into my support level, then I'm long. And you might say, Charles, that is way too much to think about. To first need to see a pattern in the price action, to see confirmation in the book map, to look for the final entry on the ticks. Like, this is just too much. Well, I have never found a simpler system. I have never, and believe me, I've spent many hours watching many YouTubers talk about how they trade markets. I have never found a system that is more reliable, meaning it will work most of the time, okay, and as consistent. That's what you need. You need consistent results. So it may be a little tricky. You may have to do a bit of thinking and take information from one chart and combine it with information from another chart. But that is how you get those edges that work consistently over and over again. That's how you remove the randomness, by looking at the market from different angles to make sure everything is lining up the way you think it is. Man, whenever I do a live stream to the Discord, it's so quiet. Just no comments at all. Remember, you can scroll up to the tab that says Futures-Charles and let me know your questions and comments there. Dan says we're waiting for your songs to kick in. Don't you tempt me, Dan. I got 6 minutes till the market opens. That's 6 minutes. I could torture all of you. And I'll do it. This is the song that never ends. It just goes on. No, I'm kidding. I won't. I won't do that. So just for the sake of observation, let's zoom out so that we got, about 20 points above or below price on both sides, about 30 points above or below price on both sides. And let's do it on both charts. Let's do it for the U contract and the Z contract. And just give ourselves an idea of the way the liquidity looks different between the two. Do you guys see the change when I click between them? It's very similar right now, which is good because that'll make it easier to read. Little more liquidity up here around 66.22 on the U contract. It's a little bit of a magnet. We want to be aware of that. But otherwise, they look the same right now, so that's good. 5 minutes till the market opens. Somebody was starting to type something in the question in the chat, and then they stopped. Why'd you change your mind? Let me know what you're thinking. Okay. So if I'm looking at the U contract right now, I'm seeing that we are going to be opening with a little bit of a gap up. So to be clear, this giant gap that was created by the contract rollover, that is not a real gap. Okay. We almost never fill that gap on the same day. We have done it before, so I wouldn't say never, but it's rare. We almost never fill the rollover gap on the Monday. Sometimes we come back for it weeks later or whatever, but this gap is not a real gap. Okay. Just to be clear, that is just the contract rollover. It doesn't mean a thing, but this gap, this Right now, 3-point gap above yesterday's high on the U contract. That is a real gap. So that tells us we are opening this morning with momentum. The market already has momentum up the moment that opening bell rings. The buyers are already in charge. They already have the edge and are more likely to take the market higher. And so they got to hold that momentum. They got to keep that buying coming in right at the opening bell if they want to keep this momentum going. And of course, on the U contract, we'll be watching for support around 66.06. Man, a lot of sixes happening right now. 66.06 is the support on the U, and 6667 is the current contract level for the Z. Got some Halloween shit happening here. Another thing I'll be watching for as I click, in between the two contracts on Bookmap is how much activity is bot driven, right? So when the bots roll over, that's when you definitely want to roll over. So if you start seeing a lot more icebergs, especially on both sides of the market, a green iceberg, a red iceberg, a green iceberg, a red iceberg, a green iceberg, a red eye. When you start seeing that on the Z contract, you'll know for sure the bots have rolled over. And I would say we're not there yet. So this will be one of those tricky days where we're trading both contracts simultaneously. There's a question here. He says, how long do you use Bookmap before bolting on the other types of software to use tools to enhance your trading? That is a great question. And it's a person by person thing, right? I mean, everybody learns at different speeds. I always tell people, don't compare yourself to others. So when people ask me like, how quickly did you get profitable? Or how long did it take you to learn to trade such and such a setup? Or, how long did it take you to learn this software? Like, don't worry about it. Don't worry about how long it took me. Just worry about, how long it takes you, because you're only in competition with yourself. You're not in competition with anyone else in the market. Okay. This idea that everything in trading is, two-sided, that there's a winner and a loser and everything, that's complete BS. Okay. I can go long at the exact same level that you can go short at the exact same time, and we can both have a profitable trade depending on when and where we take profits. So you are only trading against yourself. You want to be a little better today than you were yesterday, and you want to be a little better tomorrow than you were today. So as far as the speed of learning, don't worry about it. Just worry about getting better and better every day. So then the next question is, okay, who cares how quickly I learn to use Bookmap? How quickly should you be learning to use Bookmap? And the way that I would think about it is this. Nothing is really going to be helpful in the very beginning when you're just, beginning to learn a new thing. Nothing is going to send you crystal clear signals. You have to practice. You have to put in time and effort. But you also don't want to waste your time. You don't want to be trying to learn how to use Ikamudu Cloud or something for 6 months. And then 6 months later, you finally realize, fuck Ikamudu Cloud, this doesn't work. I just wasted all this time and energy on it. You got to figure out for yourself, where is that balance, right? I would say any new tool that you're using, expect there to be at least 2 months, 2 to 3 months, where it's still not clear what you're seeing, where you still feel kind of confused. If after 3 months, you're not feeling that you get any useful insights from it, then that tool probably isn't right for you. But like I said, the goal is just to get a little better at reading it every single day. And one really great way that you can do that most people do not do, I'd be willing to bet that less than 10% of you that are watching this right now actually do this. But if all of you did it, it would make a huge change in your trading. And that is track your results. So what do I mean by that? Keep track of something that you're seeing in Bookmap and it's giving you a signal to enter a trade. Keep track of how often you see it, how often you trade it, and what the results are. Because what that forces you to do is it forces you to go back at the end of every day and look at what did the market do that day. and try to understand, why did you make the decisions that you did? Okay, so you saw that the market took out 67 stops on this poke up. You saw that it took out 175 stops on this poke up. So that told you it's likely to keep poking up. So you went long, right? But instead, the market turned around and it came back down into yesterday's range. And so you're saying to yourself, later on, after the market is closed, you're coming back, you're looking at the charts, you're using Bookmap's replay software, which is awesome, by the way, to be able to go back and replay exactly what you did and where, and then you notice something new. You don't notice it right now in real time while you're trading because you're too busy focused on your trade. But later on, when you come back and look, you notice, oh, wait, on that last poke, they didn't take out stops. So I was assuming we were going to get another move up, and I was going long because I thought there were more stops to take out up there. But it turns out the market-generated information had already told me we cleaned up the stops. And so now it was ready to turn around and head back down. That's how you get better at reading the information, is diagnosing it as like a case study of what worked and what didn't. If all you're doing is just when you get ready to trade in the morning, you boot up your software and you just sit there and trade all day with the software turned on, you think you're gaining a skill. You think you're getting better, and you are. Obviously, your brain is going to learn things every day. And so you're going to get a little bit better every day, but like very, very slowly. That rate of change, that rate of growth is going to be very, very slow. Whereas if you go back and do your homework every day, what was I seeing? What information did it give me? And what actions did I take as a result of that information? Then you follow that up with, well, what information did I miss? What signals was I reading wrong? How could I have acted on that information better? If you do that every day, your learning curve will be way faster. And that to me is the difference between people who spend years trading with something. They've been using Bookmap for years and they're still struggling. And people who sign up for Bookmap and 3 months later, they're profitable traders. Because I know of both. I know people in both of those camps. And that's ultimately the difference. Is one is willing to really work hard at training their brain to read that software and to understand what signals it's giving, whereas the other just kind of wants to naturally get better over time. If you're talking about sports, I often use sports as an analogy for trading because I find it's the best. There's a difference between a kid who just joins the local basketball team and goes to practice every day and practices with the team, and the kid who goes home at the end of the day and spends hours shooting in his backyard, or in his driveway. And the kid who, when he has summer break, instead of just relaxing with his friends, he goes to basketball camp and he hones those skills even more. Over a period of years, let's say we start freshman year and we go to senior year, that's a massive, huge difference in the skill of those two people. The one who just shows up to basketball practice and basketball games and nothing else, and the one who's putting in all the extra effort in the off hours to gain those skills. Are you doing that with your trading software? Are you challenging yourself to get better and better at reading it every single day? Are you every single day pushing yourself to figure out how you misread something, how something could have given you different information or better information, or maybe why you should have ignored the information? Because if you continue to do that every day, your learning curve will be much faster. As far as how long it should take to learn how to use Bookmap, I would say 3 to 6 months. If you're watching how the market reacts, and there's so many pieces of data available on Bookmap. You're seeing the liquidity in the order books and how that's changing second by second. That's a study in and of itself. Just learning to study, when they add this liquidity above, what does price do? It starts to push away. So what happens is they start to pull that liquidity from above. Well, now it's turning around, it's coming back up. That's a whole case study in and of itself. You could spend months just watching the way the market reacts to changes in order flow. Then you start to say, okay, what about like the stops and iceberg setting? You start to understand how to read those icebergs and those stops and to recognize where they matter and why they matter. Like I just said, there would be no reason on earth not to be bullish a minute ago on that first little dip, except for the fact that we couldn't take out more stops on that last push up. So maybe that right there, the 8-period high was as high as we could go today purely to take out stops. Okay. So when you start to add those pieces of information together, well, now you have a much clearer understanding. Now you understand why you're getting this bounce right now let me change colors here. You understand why you're getting this bounce, even though you're not expecting it. You didn't take out the stops, so you're expecting a larger pullback. Why are you getting a bounce? Well, change in liquidity above. They pulled that liquidity. So now if you can combine that knowledge, first you spend some time mastering reading liquidity, then you spend some time mastering reading stops. Well, now you can look at the chart and have more clarity when you look at it. And you just keep building on it step by step by step. You learn, okay, how do the volume dots? How do I read those? How do those affect where things are happening? Well, those are showing me the delta between buyers and sellers. So if I see a very large green dot, I know there was way more buyers in that exact moment. Well, if there's way more buyers at the high, but the market doesn't keep going up, they must have been stops getting taken out. So that was a little sweep of the order book, and a little sweep, and a little sweep. And so you start to recognize these things. And the more you learn and the more you stack understanding, the more you get to that point where you can just look at a chart and instantly get a feeling for, is it going to keep going up or is it going to go down? Speaking of which, here's my feeling. I think we need one more poke to the upside. We are above the overnight high and we are spending time and bringing in volume. So I think we need one more little poke to the upside, but I bet you it turns around and comes back down into yesterday's range once it does. Okay? Because that's just the way I read the information right now. I read the information like we are bringing in enough momentum for one more poke, but not to keep going all day. Because if we were going to keep going all day, we'd need to keep taking out stops at the highs. So we were able to take out those stops just now. That's our one more poke. But are they really going to be able to keep it going again and again and again and again all day? I'm not feeling that because they couldn't take out any stops on this poke. Look, this is the same level. Look at where price action is right now. When we got up to 66.71 the last time, we did not take out stops. When we got up there this time, we did. So these stops that just got taken out were people shorting in between 9:30 and now over the last 9 minutes. So we would need to get a bunch of more people to short over the next 9 minutes to be able to poke up again. And then we would need a bunch of more people to short to be able to poke up again. And then we would need, you see what I'm saying? So that's not, you can't expect that to go all day to the upside. So I think we need one more little poke and then we come back down through the opening price. Now, if I'm wrong and we're able to turn the overnight high into support, well, then I'll change my tune and I'll get real bullish. Let's see what happens. So when you say to me, how long does it take to learn that? I don't know. You just learn it. Whatever speed you learn. Okay, again, what were we able to do with the next poke? Take out more stops. So we can get one more little poke to the upside. Looks to me like the Z contract wants to test 75, 66.75. See if we can't get that liquidity to disappear upon poke. Well, Charles, if you think it's going to go up 3 points, isn't that bullish? Nope, not yet. Not willing to go long for it. Dan mentioned in the comments that they're running a pro trader webinar series next week, which are always exclusive to those of you hanging out in the Discord. So everyone watching this now, you have access to that Pro Series next week. The way they do that Pro Series is they have traders that are pro traders come in and talk about how they learned how to use their software and everything else. So if you're looking to understand, different timelines for how quickly people learn things and built their skills to be able to use them in trading, that Pro Series is a great place to go and watch all those videos and see how different traders approach trading. And what you will notice is everyone has their own thing. They're all looking at the same data, but they have their own way of interpreting it, which is, custom tailored to their personality and the way that they see the world. When you can do that, success is not far behind. Okay, to me, this is the moment of truth for the buyers. We are at the overnight high on both contracts. So no matter which they're trading, if the momentum is going to continue, this is where the buyers must step in and defend. These markets pass back through the opening price, and we get a dip. So can the buyers reverse it right now? Right here, right now, right here, right now. Matthew in the house. Hello to you. Welcome. Oh, they're dancing right on a razor's edge. Nope. Passing through the opening price means on the very, very short term, over the next few minutes, the momentum up is over. So we are now back inside what I would describe as a chop zone, an area of uncertainty. So on the U contract, and I know it's very confusing that I keep switching back and forth, but I got to. U contract 6606 is the next potential support. If they can hold that, we can start to get bullish, but otherwise we should assume the next move is down. It's going downtown, downtown. Man, the fact that there's slightly less liquidity today means it's actually easier to read the high frequency bots and what they're doing using order flow. So what are they doing here? They've got liquidity underneath the market acting as support, as a magnet that's pushing price away. So they take market higher. Then what do? They pull that liquidity from below. Okay. Pull that liquidity. And then as the market starts to pull back down, they start adding it above price. So that's creating liquidity, pushing it away again. Then they pull it. What does price do? Turns around and starts coming back up again. Then they add it below. So they're basically using liquidity as a negative magnet to push price away. And right now the push is to try to push up. So when will we be expecting the market to dip again? When will we be expecting it to roll over and come back down? Well, when we see this liquidity disappear like this, and suddenly we start to see new yellow popping up above price like this, that's when we'll know we turn around and come back down. Normally it's a little more muddy than this. It's a little harder to read, because there's so many things happening. But today with the thinner liquidity, you can actually see it happening. So we're waiting for this to disappear and for new liquidity to start to pop up above. All right, so we've got the disappearing of the liquidity below. Now do we start to get the piling up of liquidity above? Okay, took out some stops. Come on, market. You can do it. Okay. So I'm going to give you my take on what I think is going on here and try to do my best to guide you, as to what to expect in the hours ahead. Okay. So earlier we talked about this idea that if you take out stops, if you poke up and you take out stops, you'll be able to poke up again. As long as you keep taking out stops, you'll be able to poke up again. And we talked about the fact that, from the first set of stops we took out to the second, it was actually new sellers piling on that gave us that second set of stops. Well, that just happened for a third time. So right now I would describe myself as bullish. I think the market is going to continue higher from here. Okay. You don't need to FOMO into a long trade at the high. It will pull back down towards the opening price again. Certainly I would say 66.12 on the U contract. And I would say 66.69. Ooh, 66.69 on the Z contract. It should pull back down to those levels. But I think that dip is buyable. And I think the market is going to continue to go higher today. But it is not that it is actually bullish. It is that they keep shorting the highs. So this is just a certain sort of market behavior that we notice where the market pushes up, they short the highs, it dips a little bit, but it doesn't reverse the momentum. And so when it comes back up to those highs again, guess what happens? Anyone that went short just now, they get squeezed. And then boop, 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 you get another pop up. And then people short again. And it turns around and it comes down a little bit. But if it doesn't completely reverse and it comes back up, guess what happens? Boop, boop, boop. They get taken out. That's what we got here and here. These last two sets of stops that we took out, that was what that was. We came back up to a previous high, and that's where we took out the stops both times. Let me try to make that even cleaner for you guys to see. So as the market was coming down in here, people were shorting and their stops were up here. Look what happened when the market came back up. Up, up, up. We got a little bit of momentum taking out those stops. Then we dipped again. But because we didn't completely reverse, everyone that was going short in there, where did they have their stops? Same place. You see it? Market comes back up, 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 up. You pop through and take out those stops. So as long as this behavior continues, the market will continue to do this. It'll dip and then turn around and come back up, pop, 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 get a little bit higher. Dip, turn around and come back up, pop, 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 get a little higher. And it'll keep creeping higher, as long as this behavior continues. But what is unique about this behavior is that it will only last until people stop shorting, right? If they keep going short and getting stopped out, and going short and getting stopped out, if they keep doing that, eventually they'll stop going short. And then the momentum up will be over for the day. So I don't think this is going to be like a trend day all day long kind of momentum. But I do think it's going to be a trend for the next hour or two, for sure. Because these people keep shorting. And every time they do, they become food for the next move up. They become the cannon fodder that keeps the battle going. So yeah, it looks to me like we're going to be trending higher probably into the B period here. And then the best way to know when this momentum is over is when you no longer see these large stops on Bookmap. When you get to that point where you get a big poke and you don't really take out any stops, there's no green dot up there, and then it turns around and comes back down, that's probably it. The high of the day is probably in, and we'll go sideways from there. But for now, that high is not in because they're doing it again. They're shorting the highs, and they are fixing to get squeezed. I would also say for both, whether you're trading the Z or the U contract, that upward momentum must stay above the opening price. So on the U contract, that is 66.10. And on the Z contract, that is 66.67. So wait for a dip. Don't chase price. Don't go long at the high because it will dip. Make no mistake. It will dip. But have confidence to buy that dip as long as you keep seeing the stops at the high. As long as you keep seeing that we're taking out more stops, assume that it can keep going up. If you get in a trade and you get stopped out, that's actually good news, right? Because if you're buying the dip and then the market can't rip again and take out more stops, what do you know is going to happen? The momentum is going to roll over and flip. So even if you buy a dip and then it stops you out, it sets you up for the next move, which is a big move to the downside. And you can make back your losses. So no reason to sweat that, right? I'm a bull. Let's see how far they can push it. Dan says, how's the fit on your jacket, by the way? Yes, Dan was kind enough to send me a Bookmap sweatshirt, which I am not wearing at the moment. But I love it. It fits perfect, and it is actually really comfortable. It's like a nice fabric. The zipper feels like a solid zipper that's going to last a long time. And I was thinking about it when I first opened it up out of the package, and I looked at it. The first thought that went through my head is like, do I want to walk around in public with this? Because it's got like the Bookmap chart on the back. So I'm like, do I want to walk around in the public with this Bookmap chart on the back of my sweatshirt? Because if anyone sees it and recognizes it, they're going to come talk to me. And I don't like to talk to strangers. It's just not my thing. So I was like, do I want some person in public while I'm at the grocery store, randomly walk up to be like, oh shit, you use Bookmap, bro? So do I. What do you trade? But then I realized it's a great way to make new friends. I want to meet more traders that live in my area. Might as well wear a Bookmap sweatshirt around and see if anyone recognizes it. I might meet somebody cool. So yes, thank you for that. Delpax says, just a quick question. Any more reasons for price to stop and reverse? Absorption, stop runs, exhaustion. So those are all things. Every single one of those things is a thing. Absorption and stop runs and exhaustion and so on and so forth. If I had to name what is making the market go up right now, I would call it a stop run. I would say they are heading up to take out stops. Now, the difference between a normal stop run and what we're getting right now is normally those stops are sitting there because of something that happened in the past, right? Like let's say, yesterday the market went down and that's yesterday's high. And so they're heading up to yesterday's high to take out the stops at yesterday's high. Well, but that's not what's happening today. Today, it's those new sellers that keep shorting the highs. Everybody's convinced this thing has to come down, so they keep shorting the highs. And as long as they keep shorting, you get the next move back up. And as long as they short it. And so, like I said, the difference between this and a regular stop run is that it's hard to predict when this one's going to come to an end, because it will come to an end whenever people stop shorting. Whenever people finally just admit they're not a genius. They can't pick the high of the day. We're in blue skies. They have no clue where it's going to reverse, and they stop shorting. Guess what happens? As soon as they, meaning the majority of traders, come to that conclusion, that's when the market starts going down. So I still would call that a stop run. Now, as far as the other things are concerned, absorption, exhaustion. Yeah, we look at all those things to understand where the market is going to run out of steam. But right now, this one is just short covering. They get short, they get squeezed. They get short, they get squeezed. So right now, at this exact moment, there is somebody going short. Where is their stop? Just above the A high. So where's the market going to go? One more poke up to take them out. That is it for this stream. As I said, I am bullish above the opening price. So as long as the market is above the opening price, dips are buyable. If the market crosses back through that opening price, we are likely to get a larger pullback. So if you are trading the Z contract, that opening price is 66.67. Getting below there will likely give you a pullback at least to 66.55, if not even as far as 66.48. On the U contract, that opening price is 66.09. You can expect to pull back at least to 6,600, maybe even as far as 65.91 if the market can hold that support. So that's why I say you be a bull above the opening price. You be buying those dips because they could keep it going for hours. But if you cross that opening price and you become a bear, you can grab a piece of that move to the downside, whatever it may be. All right, guys, thank you so much. With that, I'm going to say goodbye. We will be back on the regular YouTube video next Monday. So hope to see you all there. If you are a member of the brigade, it is time to set sail to the private stream. Thanks a lot, everyone. Have a great rest of your day.